A September to remember, some will say. However, for the crypto market, it is usually a chaotic period. Historically, September brings back so many hurtful memories that make trepidation run down our spine. The September effect has lingered for quite some time now. Will it get better this year? Not a chance. We have so many things to be scared about. Last year in September, it was recorded that if historical data was anything to go off of, Bitcoin's price might dip further, which had been the worst performing month on record for the crypto asset since 2013. According to the data available, the flagship digital asset had only seen its value rise in 2 Septembers between 2013 and 2021, in which were 2015 and 2016. Outside of those two periods, Bitcoin has recorded an average of 6% decline in the month. Meanwhile, the September effect is not peculiar to Bitcoin alone. The S&P 500 had also had downturns in most of September since 1928. Notably, between 1928 and now, the S&P 500 averaged a 1.1% decline in September. Tracing the root of this trend, some experts argued last year that the general market decline in September was due to investors' behavior. According to one of them, most investors usually exit their market positions in September to lock in their gains or even tax losses as the year draws to a close. This sounds pretty normal, right? A higher rate of asset liquidation was also addressed as schools resume in September and the need for cash to pay school costs mounts. Given how Bitcoin prices have mostly mirrored that of the S&P performance since the 2020 pandemic, it will not be entirely surprising that dips are recorded. Many investors want Bitcoin's price to return to previous highs, but the possibility of a red September is always manifesting after the asset lost all of its gains over the past few months in the final days of August. This was addressed last year, so is this year any better? September has never been a great month for Bitcoin, and according to analysts, it could be worse than usual in this particular year. As noted, Bitcoin has only recorded a positive monthly return in September twice since 2013. Otherwise, the world's most popular cryptocurrency has consistently taken modest drawdowns. This year, some analysts are predicting a monthly decline of up to 10%, which will put Bitcoin around the $23,000 range. The top crypto has been trading consistently around $30,000 between June and mid-August before falling back to earth. Since then, hitting a few spikes, it has flowed between $25,000 and $26,000. Well, to be fair, it is still up 55% year to date, but far from its 2021 high of more than $68,000. On crypto Twitter, it's now called X, the pseudonymous crypto analyst Rec Capital tweeted that they expect a decline of 7 to 10% based on historical data. Benjamin Cowan, another crypto analyst and influencer, noted that 10% is more likely. However, there seems to be a little chunk of hope as certain great news in the market is gracing the month. But are they enough to dispute the fears of the September effect? Recently, Grayscale's victory over the Securities and Exchange Commission sent Bitcoin up as much as 8% to $28,000. But as usual, in just a few days, these gains were erased. Then Rick Eldman, the founder of Digital Asset Council of Financial Professionals, pointed out that the investor eagerness follows the Grayscale decision was misplaced. This was a euphoric response from those who naively believed that the ruling would instantly translate into a spot Bitcoin ETF becoming available for purchase, he said. Although the court vacated the SEC's decision to deny Grayscale's proposal to create a spot Bitcoin ETF, the agency is not being forced to approve one immediately, but that could happen next month. In the wake of the Grayscale decision, some analysts noted that the odds of the SEC eventually approving a spot Bitcoin ETF have in fact improved. Valkyrie Investments Chief Investment Officer Stephen McClurg said in a TV interview that he thinks the odds of his firm's application being approved in October are greater than 50%. Still, the SEC has already delayed its final decision on several spot Bitcoin ETF applications, including those from Valkyrie and BlackRock, until mid-October. According to Valkyrie CIO Stephen McClurg, there is a greater than 50% chance that the SEC will approve a spot Bitcoin ETF in this year. Another expert pointed out that the agency has several other options that do not include approving a spot Bitcoin ETF. The SEC could instead appeal the court decision and demand that Grayscale refile its application, delaying all pending spot Bitcoin ETF applications for 240 days each, or even rescind its prior approval of Bitcoin Future ETF, which would seemingly satisfy the court, which objected to the ETF being treated differently. Any of these actions would send Bitcoiners into despair and likely cause Bitcoin's price to fall 20% or more. However, some analysts, including Vettel Lund, a senior analyst at digital asset brokerage K33 Research, are quite optimistic as they believe that now is the time to buy. In a note, Lund said that Bitcoin should not be trading at a 3-month low, given that the last quarter stirred several positive developments, including BlackRock's spot Bitcoin ETF application and Grayscale's court victory. Quote, The last 3 months have greatly enhanced the odds of an ETF approval, yet prices are far from reflecting this." End quote. Well, optimism or not, the odds are not far from us. Crypto is still in a mess. Apart from Bitcoin adhering to the usual September effect, other factors are sponsoring the dips, and it's not only for Bitcoin, as the SEC has not stopped raging towards certain cryptocurrencies. Even the partial victory won by Ripple against the SEC seems to have faded. However, recently, Representative Richie Torres wanted to know if the Securities and Exchange Commission will reassess its regulatory assault on cryptocurrencies after the legal setback, claiming the agency had a dreadful day in court after a federal judge ruled that some digital asset transactions fall outside of the agency's regulatory purview. The Bronx congressman wrote in a letter to the SEC chair Gary Gensler that the decision meant that crypto assets are not securities in themselves, but can be sold as part of investment contracts, which do qualify as securities. Was it a big slap on the face for the SEC? Although the district court decision is not binding elsewhere and may be appealed, it indicates that the SEC's insistence that most digital assets are securities that should be registered, which is impossible to do under current regulations, can also be successfully challenged. But it turns out that the SEC just got started. Recently, the US Securities and Exchange Commission has taken its first enforcement action against non-fungible tokens, expanding its assault on cryptocurrencies and raising a myriad of questions for issuers, exchanges, buyers, and sellers of digital assets that can be used to transfer ownership of anything from artworks to real estate. This time, the agency targeted Impact Theory, an entertainment company that raised $30 million from hundreds of investors with the sale of the founder's keys, which offered many exclusive opportunities to holders, including discounts and early access to videos and gaming content. According to the allegations from the SEC, promotional and marketing materials for the collection of nearly 14,000 NFTs qualified them as investments to the company, stating that buyers would profit from their purchase if Impact Theory was successful in its effort. The company settled with the SEC without admitting or denying the charges and was ordered to destroy all of its NFTs and pay a $6 million fine to the agency. Rodrigo Sierra, special counsel at crypto venture capital firm Paradigm, noted, "The SEC likes to pick enforcement actions and kind of stand them up as archetypes, knowing that they're not binding legal precedent. But it's like a pseudo-doctrine that they can point to and say, here, you guys have all been warned, and this is also under our remit." Also, it was emphasized that issuers should be careful about how they market and advertise their NFT projects. The line is very thin, hence demanding prompt caution. As with the slew of digital asset security charges and allegations brought forth by the SEC, it is important to know that clear guidelines and regulations would best protect both consumers and investors. However, everyone is walking on a thin edge right now. The Federal Reserve is also spreading its wings. The Fed's current rate policy is a drastic shift from its easy money stance that was in effect dating back to the financial crisis of 2008. Over much of that period, including 2020 and 2021, the Fed's fund rate was set at a range of 0% to 0.25%. But in March of 2022, as inflation surged, the Fed shifted course and rapidly increased rates throughout the remainder of 2022 and into 2023. Following the Fed's July 2023 meeting, Powell stated, "We intend to keep policy restrictive until we're confident inflation is coming down substantially to our 2% target, and we're prepared to further tighten if that's appropriate." It is not yet certain that Bitcoin will eventually collapse this month, but if the discomforts in the crypto markets become worse, it is a possibility. Things are not easy out there, so stay safe and hopeful. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.